Joining me from the IHS Energy Conference, known as CERA Week, is Steve Goodman. He is with the executive search firm Egon Zehnder. You lead the energy practice in North America.
I do.
So you have been very busy, I'm sure, as of late.
Very much so.
A lot of turmoil in the industry. Job cuts keep coming. We saw that big M&A deal involving Shell. Where are we in the M&A cycle with this current oil price downturn?
I think that we're actually at the beginning. In the fourth quarter of 2014, M&A deal actually decreased. But there's a lot of people who've held back in terms of dry powder. And so I think you'll start to see a lot more activity, especially amongst the private equity plays, trying to extend their opportunities as well.
In what area in particular?
Yeah, so for instance, E&P certainly is a major area of focus, right? There's been a lot of companies, the cost structure is very high. Companies are looking to decrease their cost base, diversify, expand, and really rule out some of the G&A costs, if you will. But on the oilfield services side, there's also a lot of opportunity. I think you'll see it across upstream, midstream, as well as oilfield services for sure.
And do you think we'll see big deals like the Shell deal? Was that a little bit too high on the spectrum, or will we see more shedding of assets and smaller kind of acquisitions?
Sure. I mean, so Apache, for one, is one that's shed some of its assets down in Australia. But I think at the same time, what you'll start to see is some of the big players, some of the large multinationals, the majors, they're going to look at ways to extend their portfolios for another 10, 15, 20 years. I think a lot of the independents, the oil and gas independents, certainly the majors will have their eye on them.
So some of the shale players, for instance?
Absolutely. Absolutely.
And what will happen to M&A activity if prices, one, go lower, or if they do eventually go back to $60 or $70 a barrel?
Yeah, I think we're looking at a trend here that relates to something similar to the late 90s, right, early 2000s, where you had a scenario where there was suppressed prices for a period of time. And at that point, there were some major acquisitions and mergers across the various organizations. Exxon, Mobil, right? There were some major acquisitions. If prices continue to be suppressed for a period of time, I think you'll start to see a lot of companies looking for ways to reset their cost structure. And that's going to be one of them, certainly within the upstream area.
You mentioned PE. How will these deals get financed? Through stock price or debt or cash on the balance sheet?
Yep. So PE loves the debt side, right? Certainly the leverage is important for them.
And rates are still cheap.
Very much so. And I think that what they're looking to do is what they're trying to find is in these opportunities, in these downturns, as executives free up, they're looking for those individuals who can create value. They have opportunities, but finding the right person that can help them create the value becomes imperative.
How will salaries look for some of these oil and gas executives? As you mentioned, there's more people, unfortunately, out of work.
Yeah, look, I think for the top echelons, they're paid very well. You'll start to see some elements of distributions that are less than what they had anticipated because of performance relative to peers. But I think overall, though, bonuses will be less. The long-term incentive payouts for middle layer management. So I think you'll start to see a suppression in the price structure.
What has been most surprising to you in this current cycle, whether it is on the M&A side, the pricing side, or the actual people side?
Yeah, I think what's been so surprising to me is that great people people who can create value are going to find a place in an organization, right? Whether it's for a large multinational, within a national oil company, or within a private equity organization. These individuals who can create value, there is a plethora of opportunities here for them. Whether prices stay suppressed for a period of time or they actually come back, I think that you'll see a lot of activity here, and that's been probably the most surprising thing to me.
And in terms of the PE side for this year, will PE be the most active in the space, M&A space, do you think?
Well, look, PE continues to be very active. They look to buy strategic assets and combine those with others, ultimately then to sell, right, and to create value. I think, however, you'll also see within the E&P side, individuals who are companies that are distressed. There will be a significant focus on E&P. Oilfield services, from a cost perspective, you're starting to see that already with some of the major announcements. And it's just not the two, it's not Halliburton and Baker Hughes. There are many others that are starting to come together. I think you'll see that as a focus more and more as prices stay low. If they rebound immediately, then there probably will be less M&A. But my suspicion is you'll start to see a lot of people looking for opportunity and to make something happen.
Steve Goodman, Egon Zehnder, great to talk to you. Thanks so much.
Thank you.